We're all pretty used to digital money, right? Tapping our cards, banking online, but there's a huge problem holding back a true digital money revolution. In this explainer, we're going to dive into the solution, stablecoins. They might just be the key to unlocking the future of your wallet.
So let's start with a really simple question. Why can't you just walk into a cafe and buy your morning coffee with Bitcoin? I mean, it's the most famous crypto out there, right? The answer to this actually reveals the single biggest hurdle keeping digital money from being an everyday thing.
And that hurdle is volatility. I mean, just look at this chart. It tells the whole story. On one side, you've got the wild, unpredictable price of a normal crypto, and on the other, that nice, straight, reliable line of a stablecoin. One is a total roller coaster, the other is a steady bridge.
So to really get why that stable bridge is such a big deal, we've got to first dig into the core problem it was built to solve.
Okay, let's go back to that cup of coffee. Imagine you pay for it with Bitcoin. The price could literally swing so dramatically that by the time you've taken your last sip, what you paid could be worth 10% more or 10% less. That kind of chaos just doesn't work for, normal everyday life. Not for businesses, not for you, not for anyone.
And this, right here, is exactly where stablecoins enter the picture. They were designed from the ground up to fix this whole volatility mess and act like a reliable digital dollar.
So what is a stablecoin, really? Well, put simply, it's a type of crypto that's designed to, be stable. Its value doesn't fly all over the place. And the most common way they do this is by pegging themselves to a real-world asset, usually the good old US dollar. Just think of it like a digital token that's always worth $1.
And this is the magic, right here. Stablecoins give you the best of both worlds. You get all the cool stuff about crypto, the incredible speed, the global reach, the super low fees, but with the predictable, stable value of the money you already trust.
Okay, that sounds great, but how? How do they actually pull this off? How do they stay flat when the rest of the crypto market is such a wild ride? Let's peel back the layers and look at the engine inside.
It really boils down to two main approaches. The first, and the most popular, is basically having cold, hard assets as collateral. So for every digital coin out there, there's a real dollar or something just as good sitting in a reserve. The second way is a bit more sci-fi. It uses complex computer algorithms and smart contracts to automatically tweak the coin's supply to keep its price locked in.
Let's break this down a little more. First, you have your fiat-backed coins like USDT and USDC. Super simple idea. One digital coin equals one real dollar in a bank. Easy. Then you've got crypto-backed coins like DAI. These are a little different. They use a surplus of other crypto assets as backing to soak up any price swings. And then you have the algorithmic ones. These are the wild cards. They have no backing at all, it's all just code. Now this is a really high-risk approach because if people lose confidence, the whole thing can just collapse. And we've definitely seen that happen spectacularly.
Now, if you've been anywhere near the crypto space, you've absolutely seen these logos. Tether or USDT, USD Coin, USDC, and DAI. These are the absolute giants of the stablecoin world. They're basically the foundation for a ton of crypto trading. But, and this is super important, they are not all built the same.
So let's look at the key differences, because they really matter. USDT and USDC. They're both run by a central company and backed by dollars, but USDC is known for being way more transparent, with regular public audits. Now, DAI is a completely different beast. It's decentralized. That means it's run by a community, not a single company, and all its backing is right there on the blockchain for anyone in the world to see.
All right, enough of the technical theory. How do stablecoins actually go from being just a concept to being a practical tool you can use in your digital wallet?
Their real-world power really boils down to four main areas: sending money, saving, shopping, and investing. This is where they stop being just a trader's tool and start looking a lot like the future of our money. First up, sending money around the world. You know how sending money internationally through a bank can take days and the fees are just ridiculous? With a stable coin, you can zip $100 from New York to Manila in a few minutes, and it might cost you just pennies. This is a total game changer for the global economy.
Next up, saving. For crypto traders, stablecoins are a safe harbor. When the market is crashing, they jump into stablecoins to protect their cash. But for the rest of us, it's a way to hold digital dollars, maybe to protect your savings from high inflation without having to worry that your digital dollar itself is going to crash overnight.
And yeah, you can actually shop with them.
More and more online stores are starting to accept stablecoins. For them, it means much lower fees than credit cards and zero risk of chargebacks. And for you, it's just a really secure way to pay straight from your digital wallet.
And last but definitely not least, investing. Stablecoins are basically your on-ramp to the whole world of decentralized finance, or DeFi. We're talking about lending out your stablecoins to earn interest, using them as collateral to get a loan, and you can do all of this without ever talking to a bank.
So when you take a step back and you look at all this, the stability, the speed, the global access, a pretty clear picture of the future starts to form. So let's talk about what's next for your money.
We are heading towards a future where the lines between digital and traditional finance are just completely blurred. Stablecoins are that bridge, and they're leading us to a world with seamless digital payments, a whole new idea of what a bank even is, and a complete rewrite of how global trade works.
So what does this future actually look like on the ground? Well, for starters, governments themselves are getting in on the act, creating their own official digital dollars called CBDCs. We're also talking about programmable money. Imagine your salary being paid out by the second. This tech could bring banking to millions of people who just have an internet connection. And for businesses, it means settling huge international deals in minutes instead of days.
And all this progress, it all points to one huge fundamental question. We're building this new financial system that's digital, instant, and borderless. So, is this the beginning of the end for cash as we know it? Is this the start of the end for that paper in your wallet? That's the big question to think about.